Hey guys, Jason Sharon here with Home Loans Inc. I own my own small boutique mortgage brokerage and have so for the last 4 years. And prior to that, I was in the mortgage industry for 3 years working in another company. So we have a lot of experience here in order to help you get your dream house. So Miss Bailey called me frantic. She had been pre-qualified by a local bank and then was declined 1 week prior to closing. The reason why she was declined was the loan officer did not do his proper due diligence and did not issue a good pre-qualification letter. So Miss Bailey's husband is a 1099 employee, and they had a pre-qualification letter that was bad because he did not have 2 years history. So if you're a 1099 employee and you're shopping for a home and you're pre-qualified, if you have not given your last 2 years of tax returns to your loan officer, it's not a good pre-qualification letter. You have to have 2 years history because although you're a 1099 employee, you're technically self-employed in the eyes of the government from a mortgage standpoint. So as we all know, you have to have 2 years history, self-employed or a 1099 employee. Because her husband did not have 2 years history, I removed him from the loan. There's no reason to keep him there. And at that point, we have the opportunity to shift debt from her to him because I don't care about his debt to income ratio. We could load him up to 1,000%, it doesn't matter. So at this point, we can then proceed down the path of getting her debt to income ratio down in order to qualify. Well, luckily, Miss Bailey was putting down a large down payment, a very, very large down payment. So what I did is I reduced her down payment down to the bare minimum of what she had to put down. And then I took that extra money, those extra assets, and used it to pay off debts. So we paid off several credit cards, paid off installment loan, and refinanced the vehicle out of her name into the husband's name. So I didn't care about his debt to income ratio because he's not on the loan. So we shifted some debts over to him as well. Then we took her insurance and got better insurance, got cheaper insurance, higher deductible, lower personal property coverage, reduced that insurance component of her debt to income ratio, and was actually able to get her debt to income ratio down to 0.1% below the federal limit. So we got her down to 56.9% debt to income ratio limit on an FHA loan, which then worked. We closed her loan last week. The real issue here is you got to go with a loan officer that understands all the intricacies. Otherwise, you could buy a house and not be able to close on it. She had already sold her house. She was living in a hotel and then had an extra 3 weeks in the hotel while we got her loan closed. But luckily we were. But if you don't go with a strong loan officer that understands all the intricacies and does the heavy work, heavy lifting up front, you could end up in the same position that she was, or even worse, having to go rent after you just sold your house. We loan officers at the Find My Way Home Network are the experts in mortgages. We will take the extra time to listen to you, understand your unique situation, and look at all your documents in the beginning to make sure you don't end up in a bad situation. Give us a call. We're here to help. Thanks.